Okay. Good evening, everybody. Hello. Um, my name is Zubin Zaveri, and I welcome all of you to this particular webinar. And in this particular webinar, we will be discussing about how to trade or how to invest, in times of, war kind of situation or wars or, anything. So how does the market behave? We'll look at a few cases that has happened in the past, during some attacks and during wars. How has market behaved? And accordingly, we'll try to understand what should we do when such kind of wars between India, Pakistan, or any other countries. All right, what is going on, so we are prepared enough, right? And all these things, we'll also try to analyze Nifty, all right, using our own platform, which is Strike, all right, web.strike.money. So for those of you who already are subscribed to it, that's great, fantastic. Those who have not, in this, you can definitely go for it and subscribe to this particular webinar. So let me very quickly share my screen. Present, share screen, entire screen. Okay. All right, so at any point of time, if you have any questions to ask me, you can feel free to ask me, all right, in the comment section. And I'll try to make sure that I have answered all your questions. And this particular webinar will go in around an hour or so. All right, so let's quickly start off. And coming to the home screen, this is web.strike.money. And over here, we will open up Nifty chart first of all for you. And I'll look on the monthly chart of Nifty. And let me take the full screen over here. Okay. So in this monthly chart, we have the data from 1997 onwards. So basically, when has war happened? All right. So war happened, the first thing, recently, that we know, it was ongoing last week. All right, so in last week, if we see, it was a red candle, and basically this red candle, all right, was nothing but this gap down opening. All right, so the week started off on 2nd of May. From 2nd of May, second, third, sorry, not the 2nd of May, 5th of May, right? So 5th, 6th, 7th, 8th, and 9th. So these 5 days, 4 days were basically, completely sideways. All right. And then there was a breach towards the ceasefire. And because of that, it opened down with a gap. But again, what happened after that? The market on 12th May, that is yesterday, it bounced back sharply. And if we look at this particular structure overall about the trend in the market, so the basic thing is, what we have to understand is, when you are looking at charts, the father of grandfather of technical analysis, Mr. Charles Darwin, he has laid down this principle, that market moves in C waves. And whenever there is an uptrend, the market tries to make higher highs and higher lows. And whenever there is a downtrend, it makes lower highs and lower lows. So if we look from October onwards, we have seen that this was a high, okay, and this was a lower high, this was a lower high, this was a lower high, even this was a lower high. All right. Similarly, we had a series of lower lows. Yeah, we had a series of lower lows. But my friend, on 7th of April, when Donald Trump declared the tariff war, market did go below this particular low over here. But if we look at the line chart, that is on a closing basis, it did not break below this low. So we can consider this as a higher low. So this was the first point where we thought that that okay, the short term downtrend over here, which started somewhere in the month of October 2024. All right, so this is some chance where market can turn up. All right, but it had not turned up yet until this particular high was taken up. So when this close came in over here, this was the place where it broke above this particular high. Okay, creating higher low and higher highs. All right, so now that it seems that yes, we are in a kind of a uptrend. All right, now looking at history, when we are talking about the wars and the market, so the first thing comes into my mind is when I was in ninth or 10th standard in the year 1999. All right, so going back on the monthly time frame chart, if we go back to 1999, somewhere over here, uh, Kargil war had happened, from 3rd of May to 26th of July 1999. Okay, so on the 3rd of May, there was a first infiltration by the terrorists into our territory, and then finally on 26th of July, Indian Army declared win against them. So in this May to July, let's understand what happened. So this is the month of May 1999. So May, June, July. So during this war, the economy was not shattered. The market remained positive, okay, for all these 3 months. And whatever the trend was, we do not have the data previously, but yes, I do remember that in 1999, from 1994 onwards, there was a IT boom, which shattered down in the year 2000 because of the Y2K bug. So this fall in the market was not because of any war or anything, but it was because of the IT bubble that got busted. Okay, Y2K bug was there in the year 2000, the millennium year which started, right? So that was one thing. Then in the year 2001, 13th December 2001. So just let me 13th December 2001 is September, October, November, and December. Yeah, so December and January month over here, this was where there was parliament attack. All right, 13 December 2001, the terrorists had attacked our parliament, and because of that, again, there was not much effect on the market. Then came 2006. So in 2004, Manmohan Singh government came into picture, and market just rallied. But in July 2006, where is July 2006? Yeah, over here, May, June, July. So this is July 2006, where there were Mumbai train blasts that were happened on the 11th. All right, but again, market did not do much over here. It remained steady. The trend was up. It was making higher highs and higher lows. So the trend was up, and it continued maybe for a brief period of while somewhere over here. It might have come down a little bit, but yeah, on an overall chart, if you see, there was not much effect because of that attack. Then in 2008, now in 2008, from January itself, there was the real estate bubble bursted in the USA. There was subprime market crisis, and because of the subprime market crisis in the USA, there was economic crisis across the globe. All right, so we were in a downtrend where prices were making lower highs and lower lows, and somewhere in the on November 2008, yeah, November, October, November 2008 over here, there was 26/11 Mumbai attack, terror attack once again. But what happened over there? Again, nothing. All right, nothing much, because the market had already crashed because of the terror attack. Market did not move much. And then recently, in 2019, before COVID, Uh, there was a Pulwama attack on 14th of February, the Valentine's Day, all right, 2019. So if you can see the February and the March month over here, again the market did not do much, and the next month March it picked up. All right, so this was a little bit of history. Let me also look at the war between Russia and Ukraine. The war between Russia and Ukraine has it's been a long, too long. Okay, since around February 2014. But the full scale attack was on February 2022. And if we look at February 2022, the market kept on going sideways over here. All right, the entire Jan, Feb. So this is February 2022. I guess around 4 to 5 months, there was continuously bombarding over there, and the bombarding is still going on over there. The war is still going on, but again, the market remained silent. Let me check February 2022 on the daily time frame chart. All right, so yeah, 2022 February. So this was the market, okay, on the daily time frame chart, where it was making lower highs and lower lows, and the trend was down. Overall the trend was down. So people called it that, yeah, this is because of Russia and Ukraine war. But I believe there is something else to it. Always there are many factors which affects the market. All right, so whatever kind of a situation is, and again, not only Russia Ukraine, this is one war that we also know is about Israel attacking Gaza on 7th of October 2023. So this is November, October. Yeah, so yeah, over here, somewhere over here, 7th of October. Again, the market did not do much. It went up a little bit, and then it just came down. All right, and then again rallied up. So we've seen that because of any kind of war, and yeah, the most important out of all these wars that we have seen, market did not react negatively much. All right, but except for one terror attack, and that one terror attack was the 9/11 2001, where the twin towers, the World Trade Center of the USA, okay, they were attacked. And because of that, the US market was halted for 4 trading days. All right, and because of that, there was again crisis which felt across. And yes, you can see that in 2001, September 2001, the market trend was already down. It went down further. Okay, but after a while, it remained sideways. All right, and then finally it picked up. So this our market picked up basically in 2004. All right, after the Manmohan Singh government was appointed, and from there it gave a one-side rally. All right, this was 2008 subprime market crash. This was the COVID crash. So you can see over here is that the market does not react much, okay, for a longer period of time during the terrorist attack or any such wars. All right, but it does react negatively, like events like COVID, where there was widespread across the globe, there was lockdown and there was no business happening. So that was a time it got there was actual subprime market crisis in 2008. So during such global events, okay, that is the period of time, that is the period where the markets react negatively, okay, for medium to longer period of time. So from this, what do we understand? From this we can understand one thing, that okay, whenever such situation is there, of course, it's not a condolences to all the families who have lost their loved ones because of these wars. But we need to keep some patience during these times. And as a trader or as an investor, what we need to do is we need to watch out for the global cues, all right, and what's happening around, and what are specially charts saying. So I believe that charts are nothing but shadows that are created by people. There are two kinds of people: the institutional people and the other people like us who are retailers. So the charts is something that we retailers can read. And what do we need to read? We need to read what the institutionals are creating. All right, so institutional people, they know much more, they have much more knowledge, and their knowledge is backed by huge money power. So let them decide whether they want to take the markets up or they want to take the markets down based on their knowledge. And we simply follow them. How do we simply follow them? By simply looking at data. All right, so for that, we have this particular platform, Strike. Okay, so on this particular platform, this is a data bank where we can read, okay, try and understand what the market sentiment is and where can the markets go. All right, so let's try and understand, and let's dig deep a little bit. So I'll put up a indicator called as Rohit momentum indicator. All right, and yeah, so this green line is the Rohit momentum indicator and red line is its average line. So for those people who don't know, this indicator works like a MACD, all right, where it oscillates within a range over here, and there is a center line called as a zero line. All right, so it goes up and down, around the zero line. Whenever from below a green line goes up, the new buy signal gets generated, and whenever the green line goes below the red line above the zero line, a sell signal gets generated. All right, but then, my friends, yeah, this was a sell signal. Yes, this was a sell signal where the green line went below the red line. So what should we do over here? Okay, the market reacted a little bit negatively and immediately picked up. So this proved to be a false signal. So if you guys remember, I don't know how many of you guys remember, and they were present in my uh, 29th of April webinar. I had done a webinar on 29th of April, where somewhere over here we I had spoken about. For those who have not attended that, you can go to our YouTube channel, okay, where currently this is being we are live over here on this channel. So you can go to the YouTube channel where 29th April webinar is also there. Here we had seen a method, all right, where we used two time frame charts. All right, so this is a daily time frame chart. So to confirm this signal, whether this could be a fake signal or a right signal, we use the higher time frame chart. So on a higher time frame chart, we had clearly mentioned that the momentum was bullish. And when on a higher time frame chart momentum is bullish, on the lower time frame chart, we have to ignore the sell signals, right? So yes, this was ignored. Market did go down on Friday, but then again, gave a super gap up, and it rallied up, and yeah, create and breaking above this high also. So currently, again, the weekly chart is still in a bullish mode. Momentum is still bullish. So if tomorrow, this range 24,958, 24,960, or to round it off to 25,000 is a resistance level. So if market crosses above the resistance level, the Rohit momentum indicator would again, give a new buy signal. All right. So which can take the market again up to these 26,000 odd levels. So overall, we can see over here is a gap over here, which if the momentum remains bullish, markets can come up to this level to cover this particular gap. Okay, you can just double click on it and say extend right side, extend right. Yes. Okay, so here we go. All right. And along with that, if we also look at Fibonacci retracements, okay, once we take a Fibonacci retracements from the low to the high, from the high to the low, sorry. Okay. So what do we have is, I'll just zoom in so that you guys can see it clearly. So we have taken this particular high, and we have taken this particular low, and there is 61.8% retracement, which was acting as a resistance level, okay, till last week. Okay, and it did react from this 61.8, and yesterday it broke above this particular level. Okay, creating a very strong bullish candle. So this 61.8% retracement, which is at 24,550 levels, okay, will act like a support level for the market, immediate support level for the market, and it would try to reach the next Fibonacci level, which is somewhere around 25,300 odd levels, which is again coinciding with this gap area. All right. So the weekly momentum is bullish. So we can expect market to head higher, take support from the 61.8% level, or maybe this huge gap up area. Okay. So market can take support from this gap area and then bounce back again, creating higher highs and higher lows. So the trend will remain intact. Okay. Any questions so far? I hope I'm clear. Let me know in the comment section if you have any questions, any doubts. Feel free to ask me. Okay, so if there are no questions, let me move further, and let me also show you that which are the sectors that you can look at it. So the first thing, very basic stuff, a common sense. If there is a war kind of a situation, all right, people are not going to stop bathing. All right, if people are ill, we'll not stop pharmaceuticals, the pills and all those stuff. So pharmaceutical industry, healthcare industry, FMCG, fast moving consumer goods. So these are some sectors which are defensive sectors. Okay, so they are the demand for their products will remain constant. So during such times, during a panic situation, these are the sectors where you can focus on. And yes, definitely there is a sentiment attached to it, where the defense stocks, all right, they just start shooting up, because they get a lot of demand to manufacture new defense products, okay, which the nation can use. All right, so these are some of the sectors which we can focus on. In the running market, how levels can be found? In the running market, Ashok Kumar, meaning during the market hours. Okay, uh daily swing and average swing can we get in 1 hour time? Okay, so I'll answer Pradeep Tiwari in a while, okay, when I show you daily swing and average swing. But understand, Pradeep ji, these indicators, okay, their values get refreshed after 5 minutes, okay, on our system. So but they are presented only on daily time frame chart. So on a daily time frame chart, if you see, you come back after 5 minutes or 6 minutes, you will see the data will change. Okay, Pradeep ji. So the daily swing and average swing indicator, all right, the data keeps on changing. all right, as per the market behavior, okay, every 5 minutes, okay, but they are available. You will be able to see that only on daily time frame chart, all right. So during market hours, how can the levels be found? Same way, Ashok Kumar ji, the way we are reading charts, um, the same way we can find out the levels. And I would suggest, I always am of a opinion that all the analysis you do it the previous night, stay prepared, and then during market hours you only execute what you have planned. Okay, don't try to analyze during market hours unless and until unless you have resources, you have time, you are a full time trader, you are sitting on a screen, you have charts, all right, and all those stuff, all right. But even if all these things are there, I do have all these things, but I refrain from doing any analysis during market hours, all right. So you can go through, here it is an interactive chart, so you can go to an hourly chart also. On the hourly chart you can see, if you are a short term trader, all right, if you are a short term trader, then we will look at the daily time frame. So on the daily time frame, the RMI is in a sell mode. So what will you do in an hourly time frame? In an hourly time frame, when the RMI gives a new sell, this is a time where you can go short on, all right. Similarly, if you are an intraday trader, so when you are an intraday trader, what should we do? You look at hourly time frame, it is in a sell mode. Then you go to a 15-minute time frame chart, and in a 15-minute time frame chart, whenever there is a buy, you can ignore this. But whenever there is a sell signal over here like this, you can trade intraday over here. Whenever there is a sell signal like this over here, yeah, you can sell. Why? Because on a higher time frame chart, on a hourly time frame chart, the momentum is sell. So for an intraday, for few minutes, you can short over here like this. Okay, so this way, yeah, you can definitely do analysis on that. Now what Pradeep ji is asking for is daily swing and average swing. So let me first show you where will you find these indicators. On the left hand side, there are these three buttons, all right. On the second button, which is analyze button, you have sentiment indicators. So once you click on sentiment indicators, there are so many indicators, we need not focus on all of them. But first we will focus on momentum swing, daily swing. So daily swing and average swing, these are the two indicators over here, which can be found only on the daily time frame chart. But as I said, these values, okay, they keep on changing every 5 minutes. All right. Uh, so we just saw RMI. All right. So what does the daily swing indicator tell you? It tells you right now the reading is 73. Okay. So this tells you right now that 73% of the stocks, okay, in the market, okay, 73% of the stocks, they are RMI, their respective RMI is in a rising mode. Okay, did you understand? They are 73% stocks RMI is in a rising mode. This is what it tells you, all right. And this is a very short term indicator. Whenever this indicator reaches maybe above 90, okay, above 80 or above 90, okay, there is one dip in the market, all right. But how will you use this? And vice versa again, whenever this goes below 20 or goes below 10, then for the next few days, a couple of days, you will see a nice big move in the market for a couple of days. So it's a very short term indicator. Now how to use this indicator is basically you can put up a moving average over here, all right. And in the moving average, if you see, we'll change it to 40. Okay, so whenever the market is above this average, above 40, it means the trend is up. So during an uptrend, we can ignore the overbought levels and we can buy the oversold levels. And whenever the market trend is down, okay, whenever the market trend is down and this indicator comes to a extreme level, over there we can short and ignore the oversold levels. Okay, so this way, and again with daily swing there is also average swing, which is a little bit smooth indicator. So whenever right now, average swing indicator from the oversold territory, it has started bouncing back. It can come up to this level also. So this also indicates that for short term, maybe tomorrow or day after, we will be able to see some positive movement in the market. This is what this indicator is telling us right now. I hope you got this. Yeah, Pradeep ji, I hope you have understood this. Right, so fantastic. So I hope, Pradeep ji, you are using this app. That's great, fantastic. But I hope now you know how to use it properly. Okay. So along with this, we also have, we can also track, FII, percentage, index futures long percentage. So what is FII doing right now? So they were in the oversold territory for quite some time. And when it started rising over here, we said that, yeah, okay, we think that we are somewhere near the bottom. And that's exactly where the market made bottom over here. All right, made gave some divergences also over here. If we see this, and if we look at this, okay, so market on, because of the Trump announcement, tariff announcement, market fell drastically. But the FII, okay, they did not sell. What, their positions were not as bad as which was before in the month of March. So there was a divergence over here, and then after that, when it bounced back, you can also look at RMI over here. And RMI also gave a nice buy signal after, after this bottom was made, right over here on 16th of April. Okay, RMI gave a buy signal, and the market, you know, behaved in a nice manner from there on. Right. So there are various other indicators that you can use, client plus FII, DII positions, proprietary index positions. All these are also there. You can also look at the market breadth. All right. But one more, which I feel, what I generally use is also something called as diffusion indicators. And in this diffusion indicators, I generally look at the overall Nifty 500 index. And in this 500 index, there is the first simple moving average, percentage of stocks about 20 SMA. All right. So this particular figure, 68%. So it tells us that out of Nifty 500 stocks, currently 68% of the stocks are above their respective 20 SMA. All right, which gives up bullish signals. Before that, over here on 3rd of March, the reading was only 6%, meaning only 6% of the stocks were above their 20 simple moving average. So this indicator is a short term indicator which says that, okay, the market is kind of oversold and we can expect some bounce back. All right, and when it comes to the overbought levels over here, we can expect that, okay, there are many stocks, 91% of the stocks are gone above their 20 SMA. So maybe for short term, okay, we can see some downtrend. And just like this, we also have percentage of stocks above 200 day SMA. So this is a kind of a medium term to long term indicator. All right, where the overbought levels do not work as smoothly as the oversold levels work. Now somewhere in June July 2022, this particular index, this particular indicator was at its lowest. And over here, okay, we got a nice meaningful bottom over here. Similarly, last month over here, March, April, this particular indicator was at its oversold levels, and yes, we got a nice, meaningful bottom over here, uh, which we, and because of this we still expect that okay, now, since the trend is also up, the market can still go higher. All right, something like this can happen over here. Okay, so something like this can happen now. All right, so like this you can also have, nifty 500, we have mid cap, small cap 100. All right, so small cap 100 is also, at its lowest level. So during the times of panic over here, these are the times, where we can start, our SIPs, probably in mutual funds, or probably if you have some, nice fundamental stocks that you have researched well. So those are the stocks which you can, accumulate when this index is at its oversold level. And one thing, yes, when especially the small cap index is at its highest level and it's sloping downwards, this is not the time, my friend, over here. When the index is started sloping downwards over here like this, so this is not the time to invest in small cap stocks. But when it is at its oversold and it started rising, so this is a good time to start investing in small cap stocks, as well as, the mid cap index is also, in a similar looking position. Okay, so sentiment and diffusion indicators, they really give you a, nice idea about what can the market, do. All right, any questions so far over here on this? Ashok Kumar, RSI. Okay, so in the diffusion indicators you are talking about RSI, Ashok Kumar ji. So we have this RSI indicator, percentage of stocks with RSI greater than or equal to 50. So if there are more number of stocks whose RSI is greater than 50, it means it is bullish. RSI is a momentum indicator. All right. So when again, for most of the stocks their RSI is below 50, okay, that means most of the stocks are in a bearish momentum. All right, so this area is considered to be over sold levels, and when this index starts improving, all right, we can, start getting into it. Now that, the most of the stocks are into the overbought territory, so we can wait for some, dips, and you can buy those dips until and unless this, starts falling down over here. But these indicators, again, the first thing is, we have to look at the trend. All right, so is the trend positive? Is Are we making higher highs, higher lows? So yes, this was a high, it is a higher high, this was a low, this is a higher low. Now, has this high been taken out? Yes. So yeah, we are still in an uptrend. All right, and when in an uptrend, you can choose to ignore the overbought levels over here. Okay, so like this, we also have for MACD, we also have for RMI, percentage of stocks with RMI buy. Okay, so those stocks whose, it has gone down in the oversold territory and now it is bouncing back. All right, so if it is bouncing back, it can come up over here, this can also come up over here. So accordingly, this move can be repeated over here. So yeah, we are kind of a trend where, short to medium term trend is, we are in an uptrend. So you can use the dips to enter into the market, okay, and trade accordingly. And do not worry about what is happening in the world outside. All right, but so if you are reading the data over here, these charts are created by the institutional people. All right, and they don't blindly buy or sell, they have a better idea about what's going on around in the world, what kind of policies can change, what sectors, and, all those things, all those analysis, let them do. We will simply follow them. All right, so that's exactly what I was trying to say earlier. Yeah. So now, when we know that, okay, we have come to a, kind of a conclusion that yes, we are in a kind of an uptrend. All right, so in this uptrend, now the question is which sectors to focus on, right? So which sectors to focus on? The best tool that we have on the Strike platform is, there are two ways we can find out the sector, do the sector analysis. I'll share the first way as well as the second way. So the first way is, there is a chart called as RRG, relative rotation graph. So you can come on the analyze section over here, and the last option over here, relative rotation graph, RRG. So when you click on the RRG, the a page like this will open up. All right, now what I have done over here is, I went to the home page and I created a watch list. And in this watch list, I have created this sector watch list of 20 stocks. Okay, I have bank nifty, bank auto, energy, FMCG, all these watch list I have created. And after I have created this watch list, we can come to RRG. And over here, by default, only indices will be selected. But I select sector Z, okay, the sector one which I have preferred. And once you do that, okay, the mid cap 250, mid cap 100, all those things will just wipe off. Okay, so this is what only indices there are. You can see nifty mid cap 50 is there, broader indices like small cap 250, next 50, small cap 50. So this creates a lot of clutter, and because of that I have removed what is not needed, and I have kept only few over here. All right, so that there is a less of a clutter. Now on this is a daily time frame chart. Now for those who don't know how to use RRG, for them let me explain you in a very simple format. Okay, on a y axis we have something called as RS momentum, relative strength momentum. All right, so if the any arrow is sloping upwards, it means that the momentum is increasing. Okay, and if the arrow is sloping downwards, it means the momentum is decreasing. Now on the x-axis we have something called as RS ratio. So RS ratio means relative strength ratio. Compared to what? A ratio is always a comparison. So if we look at nifty metal, it is sloping right, meaning what has happened yesterday, I'll just zoom in. All right, so RS ratio was 97.04, and today it's 97.34. So the RS ratio has increased, meaning nifty metal has done better than the benchmark index, that is nifty 50. Okay, so it is always a comparison. So if we say that metal index has done better than nifty 50, today nifty 50 fell down by 1%, then metal index will fall down by less than 1%. Okay, if nifty goes up by 1%, nifty metal has gone up by more than 1%. Okay, it means that nifty metal is kind of a outperforming the benchmark. All right, so you can look at it's RS ratio is 100.38. That means it is a kind of a outperformer. It is performing better, much better than nifty 50. All right, so with this, we want some stocks which are outperforming the benchmark and whose momentum is also increasing. So we want the sectors which are sloping towards the northeast area. All right, something like infrastructure. It was from here it was coming into the leading quadrant somewhere over here. Today it turned back down over here, but it is something where the momentum is steady, 102.21, 102.20, slightly zero point zero 0.01 it has come down, but the ratio is increased drastically. So if tomorrow nifty remains positive, it is the sector that I will watch out for. It, auto, Okay, these are the sectors which we can watch out for. And if infrastructure also starts performing and comes over here again, over here these arrows will keep on updating, after every 5 minutes. All right. And if you are a short term trader, you can use the daily time frame chart. If you are a kind of a positional, you can look at the weekly time frame chart. And if you are a kind of you want to look at what index to will perform in next couple of hours, then you can look at 60-minute time frame chart also. All right. So on the 60-minute time frame chart, we can see that, hey, look at this. MNC has gone up in last 5 hours. Auto is something that is coming up over here and has entered the green quadrant. That is the leading quadrant. So tomorrow we can watch out for the auto sector, for first 15 to 30 minutes. And if using other technical analysis data, if we feel that okay, it's good, then Nifty auto is something that we can watch out for tomorrow. Okay, even consumer durables, look at this, it's sloping towards northeast. Okay, so something which is facing northeast is something that we will buy in a bullish market. And if the market is bearish, then we will look at something which is facing southwest. Okay, so currently none of them are headed towards southwest. But let me check out weekly chart. So on a weekly chart, look at the metal index. So if you are a positional, metals are something that you will avoid for positional. It's headed towards southwest. Yeah, but if you are a short term trader, you want to make one or two bucks quickly, then yeah, we will wait for metal index on a 60-minute time frame chart to come into the leading quadrant. So this way you can do the sector analysis very beautifully. All right. And for an investor, you can also go to a monthly time frame chart which updates very slowly. Okay, the graph goes very slowly. So in this graph we can look at Nifty Financial Services, which is going towards the north east. Bank Nifty, private bank, these are the ones to look at for investments in current situation. All right. So relative rotation graph is the first way where you can look at the and do sector analysis. And the second way is you come to the discover section, the first button over here on your left, and come to scanners. And in scanner, we have a dedicated RMI scanner. In RMI scanner, we will again select our sector Z, okay, watch list. And we can look at the momentum on the hourly, daily, weekly and monthly time frame chart of all these together. So now what do we have over here is first of all we can see auto, the daily momentum is bullish and the weekly momentum is also bullish. So auto is something that we can watch out for. IT for short term, where the daily and weekly momentum both are bullish, is again something that we can watch out for. Media is something I'm always scared of, but yeah, daily and weekly momentum is bullish. Metal also is bullish. And MNC on the daily has given a new buy signal over here. Can you see this? Now if you are looking at a laptop, you may feel that the chart is very small. So what you can do is you can press control button on your keyboard and scroll your mouse. Okay, so that the table gets smaller and you can see the chart in a bigger way. All right. So MNC has given a new buy signal, and on the weekly chart it is a in a buy mode. So MNC, you can look at it. Consumer durables, we just saw on the RRG chart as well. Consumer durables index has given a very good RMI buy, new buy signal, where RMI went below zero. It completed its cycle over here, and then it gave a new buy. All right. The index is above its moving averages 40 EMA and 20 SMA. All right. And on the weekly time frame chart as well, from below the zero line it has given, and it has crossed above this also. So out of all these things, I can feel that yeah, Nifty consumer durables is something that we can watch out for. And now you want to find out stocks from Nifty consumer durables which are looking strong. So you can use the same thing over here. All right. And for from instead of sector Z, you can select Nifty Consumer Durables. So I will not find this today. You can, go ahead. You have your own subscribed strike module. You can look at Nifty Consumer Durables. You analyze the same way that we analyzed just now. All right. And then looking at the charts, you can take further decision, right? So this is how, we generally can do our analysis. All right. Can we save the RMI indicator, Ronald? I do not understand. Save as in where you want to save? You want to download the result in your Excel format? So let me answer this. So what? Not RMI scanner permanently. Yeah. So it will keep on fluctuating. Okay, as and when the signal changes, this will keep on fluctuating. So what you can do is, you can simply, once you get this detail over here, you can right click anywhere on this particular table and then export it to CSV format or Excel export. So that will remain with you, and then, after it changes, you will have some data which is behind. All right. Yeah. So any other questions, any further questions, my friends? Awesome. So yeah, for those of you who do not have, subscription, you can definitely subscribe to Strike. Log on to web.strike.money. All right. And let me tell you, 1 year subscription is 5,000 rupees. All right. And 6 months of subscription will cost you 3,000 rupees. That's it. Okay. Which comes to around 400 or 450 rupees a month. So you can subscribe, and you can get in touch with our customer service team who will help you to activate, okay, your subscription. Any doubts or questions, please feel free to ask me. We still have some another 5 to 8 minutes left, so we can spend this time for question and answer. ज्ञान की धारा सर, सम हिंदी। सर जी, आपका नाम पहले तो आप मुझे बता दीजिए, ज्ञान की धारा। हमारा हिंदी का सेशन जो होगा वो थर्सडे को 6:30 पे होगा। ओके, आज ट्यूसडे है, तो हम लोग ने इंग्लिश में सेशन रखा है। हम लोग थर्सडेज को हिंदी में सेशन रखते हैं। तो आप चाहे तो आप थर्सडे के सेशन में भी आ सकते हैं। Any queries relating to the platform, relating to any indicator that you may not understand, please feel free to ask me right now. So let's also, in the meanwhile, let's also analyze Bank Nifty chart. I have Bank Nifty opened up over here. I'll open up interactive chart. So in the interactive chart, you can load the RMI. Okay. So what do we have on the daily time frame chart? Now see, this looks like kind of a flag formation. Okay, now flag is a trend continuation pattern. All right, where it has a sharp pole over here. Okay, and if there is a breakout, so this looks like a flag, right? So if there is a breakout, the same, the pole length, it can, give a move up over here. RMI on the daily time frame chart is currently in a sell mode, but if we look at the weekly chart, it is in a buy mode. And also if we look at the monthly time frame chart, a little bit more upwards can generate a buy mode on the monthly time frame chart. So on the monthly time frame chart, bank nifty can give a new buy signal. All right. On the hourly chart, yeah, it's in a sell mode on a 30-minute time frame. 15-minute time frame has just turned a little bit positive, so we'll have to wait at least on an hourly time frame chart. Let it come up, and on the daily time frame chart, let it give a breakout and sustain above 55 456 levels. And then yeah, if bank nifty is something which can lead nifty. Yeah. Ashok Kumar ji, forget RMI. Nothing in the world is foolproof. Yeah, technical analysis is, there is one principle of technical analysis, that it is not a holy grail. Okay, it is a probability game. All right, stock market is nothing but, it's a probability game. So we have to judge using various indicators, okay, and try to understand whether the probability of prices to go up, is it higher or not. If the probability is higher, then we go bullish, okay, we go long in the market, okay. But if the probability of prices to go down is higher, then we will go short in the market. So everything has a probability. But yes, as I said, RMI is something like a MACD indicator, but it is more effective than MACD. Okay, it has, you go back to, my YouTube, on our YouTube channels, and you can look at this 29th of April ka session, where, I had specifically covered only RMI as an indicator, how to use it. And many a times all the indicators give some fake signals. Okay, so how to avoid those fake signals, how to do risk management, okay, is something, how to put stop loss, where to put stop loss, is all these things were discussed in that particular webinar. So always remember, there are three things, in trading or investment. The first thing is you need to have a method. Okay, using RMI is nothing but a method which, gives us, when to buy, when to sell, where to put target and stop loss. So one method is important. Second is risk management. That is something that we need to learn. All right. And the third and most important is something called as mindset. All right, mindset is nothing but, having discipline and following the rules, okay, of the method and risk management. So when you put all these three things together, then you make a profitable trader or an investor. Okay, and understand, there is no guarantee, there is no foolproof in stock market or in life also, right? So, with that, my friends, let's wind up this particular session. I wish you all the very best, and see you on Thursday again. Right? Bye bye. See you.